Good morning or good day. It's Monday, 12th of November 2018. Welcome to our global series, Real-Time Daily Trading Ideas. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market screening, maybe 1 or 2 questions from your side directly answered in our webinar. Our goal is quick and smart, so let's have a nice start like every day. And like every day, we will start with our risk disclaimer. Trading with financial instruments offered by Admiral Markets carries a high level of risk, which is not suitable for all investors due to their complex nature. If you are a starter, please start with a demo account and make yourself familiar with long trading, short trading, leverage trading, and your personal risk arrangement. If you'd like to read the long version of our risk warning, just visit one of our regional web pages, for example, admiralmarkets.com, and you will find everything displayed there. If you are in the European Union, there we will also find some information about the different offers and options for retail clients and professional clients. Since August 2018, there are different options and offers for retail clients and professional clients due to the ESMA regulation. A picture shows more than 1,000 words, 2 prominent examples, DAX 30 and also Euro-Dollar. The margin requirements could be quite different, as you see here displayed. If you are a professional trader and you like to get the professional client status, if you met the criteria, you can apply for them online. The direct link is here displayed. Retail clients still have a big benefit: unlimited protection against negative balances. Professional clients don't get that via regulation. But some brokers and of course also Admiral Markets have another protection. We call it negative balance protection policy. Here also professional clients get a protection up to 50,000 British pounds, what is round about 70,000 euro. All details and all about that on our webpage like displayed here. This is me. My name is Jens. My English made in Germany, but I'm not the main speaker. The main speaker is the day trader of today. This is our scheme. Like today, on Monday it's Jay's Day, on Tuesday it's Paul's Day, on Wednesday it's Giancarlo's Day, on Thursday it's Marco's Day, and on Friday it's Dirk's Day. Our leading day traders live every trading day, every business day to the same time. It doesn't matter if you're retail client or professional client or wherever you are, anybody at Admiral Markets gets the same spreads. For example, DAX 30 or also Euro-Dollar, triple spread of just 0.8 pips or points during main trading hours without additional commission. Also here, check it out on our web pages like admiralmarkets.com. We are a global player, one world, global offer. So if you'd like to check out our activity in Chile or in the European Union or in Australia, just visit our webpage and there you will find some information about our global activity. It's your choice. If you'd like to do so, just go online. Enough from my side. Now it's time for Jay. Good morning, good day, Jay. What's your view to the markets today?
Good morning, Jens. Good morning, traders. Can you hear me well?
Very well.
Numbers. Okay. Give me 1 second. We had technical difficulties this morning, and hence I'm finishing the last slide. Risks of the trade are Brexit headlines, of course, and or weaker than expected U.S. numbers. Off we go. Pictures done and dusted, and I'm going to show you my screen and we can start. Sorry for that, Jens. You guys had made a change overnight since the beginning of the month, and then my account was gone. So I tried to get a new account going this morning. I apologize, guys. I hope you had a great weekend. So let's rock and roll. Here we go. Disclaimers in full effect. Good morning, Chris, Jörg, Bob, Dees. Hey. Great to have you guys back. Great attendance. Thank you very much. Rock and roll. Trade from last week, short Euro New Zealand. I'm hoping someone joined us on the trade because you were able to make a lot of money. Not only did it go according to plan, but it went a lot further. Although be careful now here at the bottom edges, could be a bottom forming. Nevertheless, it's a super interesting week. If you're a day trader, expect to make some money. If you're a swing trader, it's going to be a little bit difficult. We have a slightly mixed picture this morning. Asia was slightly green, but the yen is seeing inflows. The dollar is seeing strength, which is a typical risk-off currency right now because there's some concern about global growth. Chinese growth continues. Commodities continue to underperform. And so we're seeing some money flowing into the US dollar and we're seeing some money flowing into the yen. And that, of course, causes Asian equities to be a little bit mixed. Australia, 30 basis points up. Nikkei, 10 basis points up. Can't really rise that significantly if there's such a yen strength. Shanghai was up because the government came out and said we're here to support. Nevertheless, the People's Bank of China noted that the Chinese economy is under continued pressure, so Trump's trade war is taking an effect. Unfortunately, we also have UK unilateral exit. Its backstop on Northern Ireland looks impossible. It's a very hectic week. One meeting is contingent on another meeting really taking place. Quite tricky, the negotiations at this very moment in time. Even if there was a deal, it looks unlikely that Prime Minister May in the UK would get the deal through Parliament. Wow. German Fin Minister earlier this morning stated all parties should prepare for a no-deal Brexit scenario. It's going to get tricky, guys. It's like I said, if you're a day trader, make a lot of money this week. It's possible. If you're a swing trader, it might be advisable to step aside, at least for the G8. Nevertheless, let's have a look if we can find something. Cable is below the 128. The figure may cancel an emergency cabinet meeting, which now lessens the probability for an EU summit this month. If there's no EU summit, uncertainty remains. Time is running out. March of next year, there's supposed to be the Brexit with a deal in place. Tricky. Italy. Yes, tomorrow is the deadline. Italy is supposed to resubmit their budget. It was the first time in EU history that the EU voted down a budget, didn't accept it. What was the issue? The issue is it was too positive. The growth assumptions by the Italians were too positive. So now Italy announced, look, guys, we're happy to lower our 2019 budget growth forecast from 1.5 to 1 to 1.2% to get your guys' approval. Deadline is tomorrow. It's going to be of interest to us. We continue to keep it on the radar. Last but not least, the Saudis pledged to reduce oil exports next month by 500,000 barrels per day. He or she of you who trades dollars sees, boom, nice gap open, which is now getting filled. Oil price is a little low. The OPEC plus guys don't necessarily like that, but Saudi is in there looking to reduce supply. WTI gapped, as I said, to 61.28. The front month is now coming off. Always keep an eye on Italy 10-year spread. We're currently at 3%. The high on October 1 was 3.38, and some arrogant guys over there in Italy stated 4% would never be reached. I have it on my radar. I'm keeping watching it. If it gets to 4%, expect some significant euro weakness. Significant euro weakness. Overnight, we saw weakness in the pound. We saw weakness in the euro. We saw some strength in the dollar and in the yen, as well as in the Canadian dollar. Why the Canadian dollar? Why? Why, VT? According to your question? Because of oil strength. High correlation. So the Canadian dollar has no influence on oil, but oil has an influence on the Canadian dollar. Okay, risk events. In the interest of time, we're not necessarily going through it live, or should we do that? Do you guys want to do that? Might be easier to go through the slides that I prepared. Like I said, VT, it's about Canadian dollar strength is due to the oil bounce that we saw earlier on. Over in the United States, what's on the docket? We have consumer price index month on month expected to come in stronger than last time with 30 basis points, and the core CPI 10 basis points better than last time. Why was September so weak? Well, it was weak because of a decline in used car prices and a slowdown in housing rents. But, and this is so interesting with statistical data that the big boys trade upon, you need to figure out, well, you have analysts for that, and they tell us, hey, they tweaked the pricing methodology, and we expect this pricing tweak in terms of the methodology to work itself out in October and November. So that's quite interesting. So even if it comes in higher than expected, that doesn't necessarily mean that it's sustainable, and it might all drop off after this methodology in the pricing tweak works itself out of the system. So you need to understand the quality of the data that comes in. Headline CPI might be of more importance that well, but it's also expected to plunge in response to weak gasoline prices. The oil future kept dropping, RBOB futures kept dropping, and now we're switching the refineries over to producing heating oil, seasonally dependent, because the cold weather season is starting. So while core CPI inflation may stay in the 2 to 2.3% range through March, if it comes in much higher than that, expect further US dollar strength, please. Thursday, we have core retail sales. Ooh, that's interesting. Expected to come in a much stronger 50 basis points than negative 10 basis points last time. Why was that? Again, it was buoyed by vehicle sales and strong chain store activity. You can see that also in the chain store equities, which rallied recently prior to the sell-off. Okay, so some positive numbers towards the end of the week out of the dollar. So we want to play the dollar from a strong side. Pound. Wednesday, CPI. Again, super important inflation numbers expected to come in slightly higher than last time. The recent fluctuations were due to energy prices, which led again to some distortions for the headline figures. Again, better to focus on core, and that's expected to come in at 1.9, just like last time. Please recall that the Bank of England recently updated their forecast for the fourth quarter inflation to average 2.5% year on year. So again, we need to put everything into perspective on what's already priced into the market. And then we have a very, very, very important component on Tuesday, and that's average earnings. And those are expected to come in really strong at 3% versus 2.7 last time. You can see it here on the bottom right-hand side. 3%, that's really good. It's so good that Bank of England's Haldane recently claimed that there is more compelling evidence of a new dawn breaking for pay growth. Wow. Inflation taking hold in the UK. And again, recall, we need inflation for sustainable economic growth. Can't be too high, but it cannot be deflationary either. So I would love to long the pound based on the economic numbers, but I can't, because of the darn Brexit scenario. So I would love to buy bottom edges pound, but it's too risky for a swing trade. It is too risky. In fact, I'm looking to short the pound on a retracement higher because A, Markets, we're trading in a box, and B, I think they're going to mess it up, or i.e. the politicians are going to mess up the Brexit scenario, or we're going to get a last second agreement. But that should give me enough room to make some money on the pound on the short side. Unfortunately, the pound will react the most to Brexit headlines this week and not so much to fundamental data, which, guys, honestly, is not that bad. Yeah. Okay, over in our last slide, over to the Aussie dollar. Aussie dollar, based on the commitment of traders report, is definitely a long, just like the Kiwi. Aussie dollar. Thursday, we have employment change. Oh, that looks strong. 20,000 jobs versus last time 5,000. That looks very strong. Again, why was it so last time? Let's dig into the numbers. Our analysts do that for us, and they told us, hey, the participation rate slipped last month to 65.4 from 65.6. And that sees the labor force decline by over 30,000. Aha, interesting, because we also on Thursday have the unemployment rate. That's expected to tick up to 5.1, which would be usually negative for the Aussie dollar. But one argument is simply, hey, the participation rate fell. Had it not fallen as much, the unemployment rate would have been even higher. Okay, interesting. So again, it's just tweaking itself out of the system this coming week. On Wednesday, we have wage price index. So that's important. Unfortunately, it's expected to come in just as the same number as last time at 0.6%. So no sustainable, meaningful pickup in wage inflation. As long as that is not the case, the RBA will not yield expectations in the market towards a rate increase down the road. Yeah. Recall, I told you last week, until 2020, no rate hike expected over in Australia. We need inflationary pressures to pick up sustainably for the RBA to start talking about a rate hike. Once they do that, we'll see sustained Aussie dollar strength. So again, the commitment of traders report positioning only gives us pressure in terms of positioning. But as long as the Aussie dollar is in the crossfires of the Trump and President Xi trade war, it's going to be difficult for the Aussie to sustainably rally. Nevertheless, it has triggered a long. Nevertheless, over the weekend, there was some conciliatory announcement from Trump and Chinese politicians in terms of trade negotiations. Everybody's being quite friendly right now. So we'll see if that yields to any kind of solution. As soon as we have even the hint of a solution to the trade war, it's risk on across the board. Across the board. So get ready to buy then. All right, let's have a look at positioning. Like I already alluded to, we have Aussie long triggered and New Zealand long triggered, and we got to keep that in the back of our mind. Volatility in terms of the euro increased. Of course, this week is going to go even higher with Brexit. Pound increased, going to go even higher because of Brexit. It's a crucial week this week for Brexit negotiations. It's very, very crucial. This week is of importance. So economic data, well, we have some inflationary data. It's going to be mostly a headline-driven Brexit story this week. Yen trending. And when it's trending, the volatility comes out of a market. So hence we're seeing a little bit of vol drop in yen, and of course volatility dropping in the US equities. Why? Because they're bouncing, and they bounced nicely once everybody was secure to the downside. The bounce was up and running. Hopefully you got some cheap equities on the downside. Option pricing, bullish for the session on Monday morning. There was no information to be gained from the option pricing market. But in terms of bearish sentiment, we had cable and Aussie dollar. So you see how difficult it is. So on a longer time frame, we have a long Aussie dollar for the Monday morning session, which Mondays is always what we call construction day. The big boys get into position for the campaigns that are going to go through this week. And on Friday, we have square up day, i.e. the swing traders take off their positions off the table, realize gains, earned losses, and hence you have counter trend moves on a Friday. Whereas Monday is, we got to find liquidity to get into the big positions. So if I see a lot of pound weakness today, naturally I'm inclined to long the pound. It's a gamble. The trade I picked out this morning is a gamble. The last 2 weeks were super solid, ultra easy trades if you know what you're doing. Short Euro New Zealand, the trade prior that week was also a super easy winner. This week is not easy. It's more of a, I'm inclined to say gambling week. Yeah, it's not that easy this week. Option flows, bullish for Monday, the Aussie, the pound, the yen, and the Swiss. Only the yen is on the money. The Swissy is doing nothing. It's going sideways. Bearish for Monday, Canadian dollar. Well, that's wrong due to the headline over the weekend. The guys couldn't know that on Friday. This flow data is from Friday, so they couldn't know it. Plus, they're so secure to the downside, it's almost like a counter indicator in the Canadian dollar. So my traders know how to read that, so they would read this extreme reading as a bullish sign for Canadian dollar, and then that would make sense. Again, euro completely off. Gold is correct. Bearish. Why is gold coming off? VT. Why is gold coming off? Very simple. Okay, then I'll ask one of my traders, Chris, why is gold coming off? Dollar strength. Jörg, excellent. Chris, excellent. Dollar strength. My guys are really switched on. I'm proud of you. Okay, potential trade this week. It is a gamble. Not quite, because I'm happy about the dollar direction, not that happy about the pound direction, because I explained it one last time. Fundamentally, I like the data. I just think that they're going to F up the Brexit scenario. So pound, Brexit, Brexit, Brexit. Risky to short it. I do like the economic numbers. They are expected to come out quite strong. If they beat, be careful. Dollar, I like dollar. So let me tell you one thing. If, for example, this week you see a very weak euro, for example, then short the euro dollar. If you were to see a very weak yen, then long dollar yen. My target is still intact. I'm still looking for 104. What are we in dollar yen? Where are we in dollar yen? Oh, wrong broker, sorry. Gotta take a look at it in a second. Hang on a second. Let me pull it up real quick. Yens, I know I'll be done in 1 second. Load chart, dollar yen. Dollar yen. November 8th. That's the last one. That's the one. That's the one. Dollar yen. Yep. Here we go. 104.50. 104.50. This is what I do with my traders. This was last Tuesday at 113. Take profit is 114.50. Stop loss was 112.17, which we're trailing up right now. 14.20. Target not reached. You see the big boys are long, the big boys are long, the big boys are long. Here, a couple of big boys took profit, but still overall more guys long than fundamentally strong dollar. So if you were to find a weak yen, you could do dollar yen. This is what exactly what you're doing. Exactly. And on the pound, I don't know exactly. That's why I'm reiterating, it's very risky. You don't need to follow me on this one. You do not need to. I just cannot find a weak currency this morning. It's Monday. Everything looks okay-ish. I can't find a weak currency. So if I were just to simply buy the dollar, I would probably do something on I don't trade CFDs, but if there was such a thing, just buy the Dixie, the DXY, okay? You want to be long dollar, especially given from mid of the week. Risk to the trade. Brexit headlines coming in better than expected, and of course, weaker than expected dollar numbers, which I don't really see. Nevertheless, here's the trade. This is the box, top edge, bottom edge. We just broke through the vacuum. You can see there's a vacuum here with a market. We call that withdrawal of liquidity. Us market makers, we just take the price higher because we don't want anybody else to short it. So bam, bam, bam. And on the way down, you can see that the vacuum does the same thing. Most of the time, it just drops. Air pocket. I'm a skydiver. If you know an air pocket, it's quite fun, actually. Skydiving, not flying an airplane. Okay, so I want to see a little bit of a retracement to 129.5, maybe even 130, and then boom, I expect bottom edges to get challenged again. 11:21, 21 minutes, not that bad. Okay, Dees, what are you saying? Euro dollar short retracement may be better. Could be better. Could absolutely be better because the economic euro numbers are weak. The reason why I picked pound these is because I think May is really having a mutiny on her hands in the back, but that's just a feeling of mine. And you and I know it's quite cumbersome to read through all of the headlines. And honestly, if you follow it on Twitter, it's hilarious. A lot of the very good traders there throw up their hands and say, what deal? Who knows any details? It is so messy and so complex. They made such a shit show out of it. Nobody really knows what's going on. And so I expect it to just be a cluster F and just end badly, potentially. GJ, based on daily view. Yeah, VT. Okay, GJ, long or short? Long or short? Thanks, Chris. 114.5 that was. What are you doing? Long or short, VT, on GJ? Sell. Okay. Off of top edges, right? Please be careful that you get a very, very good price. Think in terms of premium and discount, right? We don't want to buy anything at fair value. We want to sell something at a premium, and we want to buy something, we want to be long at a discount. So 113 was really, really good. If you look at the dollar yen, for example, I mean, hello? Amazing. I was going to show you, and as you can see, it's not working. Okay, I wanted to show a reaccumulation. It doesn't do it. Anyhow, if there's no questions, then I thank you for showing up. See if you can find something weak during the week. Be careful. If you don't trade with a squawk, get a squawk. Go to Financial Juice or something like that and get a subscription there. Or don't day trade without live news, please. That's just hazardous to your wealth. And then hopefully I'll see you again next week. Thank you for showing up. Thanks to my traders. And thanks, Jan, for the opportunity to do this with you. And VT, 147.5 you sold. Good trade. Good trade. Let's look at it next week together. Please remind me, and we'll see how my cable trade short from a retracement may work out. Mike, thanks for showing up. Thank you, guys. And sorry for speaking so fast. I tried to cram a lot of information in there in the interest of time. Have a great week, guys. Thank you very much. Bye-bye.
Time is money, and my lovely quote of the day, bam, bam, bam. That's Jay Medrow. And if you'd like to see other styles, just visit us tomorrow, 5 days a week, 5 different traders. So tomorrow, another day trader. Hope to see you there again. And if you'd like to see and watch that again in a couple of hours, it will be available on our YouTube channel. Just go to youtube.com/AdmiralMarketsFX. Greetings from Berlin office all the time. Good trades. Bye. Bye.